Hi, and welcome to TMC Connect. We're going to get started at the top of the hour. I have gone live just a little early because we've got a big crowd today. Thank you all for being here, and we will look forward to getting started right at 2 o'clock Central Time, 3 o'clock Eastern. Okay, so we still have some folks filtering in. We're going to give everybody just another couple of minutes to get settled in here. My name is Tony Bramley, and I'm the Director of Business Development here at the Mortgage Collaborative. You have come today to TMC Connect to hear two of our amazing partners discussing valuation, modernization, and what it means to you. Today, we have Justin Alexander from Fannie Mae. Justin is the Director of Collateral Strategy and Innovation. Hey, Justin, how are you?
Doing great. How are you?
Excellent. I'm doing really well. Thank you. And then we also have Aaron Fowler, who is CEO of Stewart Valuation Intelligence. Hey, Aaron, how are you?
Doing well, Tony. Thanks.
Thank you. I want to thank you guys so much for bringing this topic to the Mortgage Collaborative Network and to TMC Connect. Appreciate your time and getting this all prepped and ready to go. For the audience, I want to say thank you for coming in again. Also want to let you know that we want this to be engaging, but you are on mute, so you can't really say anything, but you can type, so please feel free to do that. Type your questions or your comments in the chat, and then we will take those at the end of this session. I also want to let you know that if we will have an email that comes out tomorrow. It'll have a link to this video as well as what Justin will be sharing with you. The deck will also be attached. So that'll be an email that comes to everybody tomorrow. So thank you all again for coming. And Justin, if you want to share your screen, we can get started.
Sure. Let me see if I'm smart enough to figure this out.
Oh, I see it. You got it.
Are we good?
Yes.
Okay. Good afternoon, everyone. My name is Justin Alexander, Director of Collateral Strategy and Innovation for Fannie Mae. Been with Fannie Mae for about 3.5, 4 years now. Primary responsibility is owning innovation, ownership of our pilots, our test and learns. Do a lot of work with external parties. When we find something that works in the mortgage origination process, then I work closely with our collateral policy team to bring that into our selling guide. So going to walk through kind of just a few updates, and then we'll do some Q&A with you, but looking forward to the conversation today. So just a quick Fannie Mae disclaimer. So while every effort has been made today for me to give you, accurate information, our selling guide ultimately trumps anything that I say here today. Wanted to start out with just kind of level setting on industry challenges. So we've been in the process on a continuous journey to modernize the appraisal process, the valuation process for a number of years now. We've had a pilot that's been ongoing for about 5 years. We've learned a lot. We've taken some of that pilot and put it into policy recently. We'll talk a little bit about that, but really fundamental to everything that we're doing in this space is trying to address some industry challenges. And these industry challenges were really highlighted or brought to the forefront a couple of years back when FHFA did their RFI. So main industry challenges that we think about often is just helping underserved borrowers to provide alternatives to the traditional appraisal that are less expensive, that are faster, and that entail less risk for bias. I know bias is a big thing that's been in the news over the last couple of years, and that's certainly something we're thinking about. We want to address some industry pain points. So appraisal bias risk, as I mentioned, data and valuation inaccuracy, process inefficiency, and then appraiser capacity. While appraiser capacity is not the issue today, due to volume being low than it was, a year and a half ago, 2 years ago. If you've been in this industry long enough, you know that it's cyclical, and that volume will come back, to some extent at some point. So appraiser capacity, there's only a finite group of appraisers that are, licensed or certified today. That number is not growing just a whole lot. So in a time where there is heavy volume, we do see this appraiser capacity issue. And then we're always thinking about how we can improve objective data capture. So there's a lot of technology that we've seen, come to market over the last couple of years that can allow for, better capture, standardized data, and just to any extent that we can bring objectivity into the process, we want to try to do that. And then, align loan level risk to the valuation product. So historically, and you'll see on the next slide, kind of in our spectrum, but historically we've had two options that loans go down from a valuation standpoint. One option is the appraisal waiver. The other option is the traditional appraisal. We think that there's loans that don't quite, meet the qualifications for that appraisal waiver, but don't necessarily need the full-blown appraisal. So we've tried to develop some options that fit between those two. We've got some of those in our selling guide today, and we've got some more coming. So we'll talk a little bit more about that. But just being able to align the loan level risk to a specific valuation product is something we're really trying to do. So this is our modern valuation spectrum. As I've mentioned, we've been on a continuous journey to build this out. On the far left-hand side, you see value acceptance. This is our traditional, what we used to call appraisal waiver. We've just rebranded that to value acceptance. On the far right-hand side, you see the traditional appraisal. The options that I was talking about in between these two, value acceptance plus property data. This is our newest policy offering where we offer the waiver or the value acceptance contingent upon the property data collection being delivered to our API. Then as we move across to the right, we've got our hybrid. This is connected to value acceptance plus property data in a very limited capacity. So the hybrid is acceptable on a very limited controlled rollout. But we do expect to have a broader hybrid rollout. We'll talk more about that either late this year or first part of 2024. Then we had our desktop option as we move across the spectrum, which was launched last year. So that's in full production. So really our goal is by the end of this year, Q1 of 2024, we have all of these options, fully built out in our selling guide and available through Desktop Underwriter. So a few policy updates. I've talked briefly about these, but value acceptance replaces the term appraisal waiver. Value acceptance plus property data is our newest option that offers the waiver of the value acceptance up front, contingent upon delivery of that property data collection. Then hybrid appraisals, I mentioned, it's only on an exception basis. And then we did also release some alternative methods to the 1004, which allow for some flexibilities for lenders to confirm the completion of repairs for existing construction. And I wanted to give just a brief pilot update. This, as I mentioned, this has been, we've had this pilot ongoing for about 5 years now. It is going to remain in pilot throughout the remainder of this year. We'd like to be able to bring it into our selling guide at the end of this year, first part of Q1 of 2024. But just some things that we've learned. We've had over 300,000 property data collections delivered in pilot. We've had 264,000 hybrid appraisals completed. On the PDC, the main property attributes being like condition, view, location, GLA, all very consistent with what we see in prior appraisal data. So we feel good about the data that we're able to get that's captured through the property data collection process. Hybrid appraisals, we've studied these just about every way possible. We have a number of different metrics that we compare them to the traditional appraisal from internal systems or internal resources. We have review teams that look at these and compare them to a traditional appraisal. And by all accounts, the hybrid appraisal performs as well as the traditional appraisal. The hybrid being a bifurcated process where property data collection happens typically from a third party. And then the appraiser completes the 1004 using that property data collection. And then of course the traditional appraisal being the appraiser does the entire process from start to finish. And we have observed turn time and cost savings. So again, given the market that we're in today, turn time savings, not so much, but when we did see really high volumes, we saw significant turn time savings for the hybrid. It wasn't unusual for us to see 4 or 5 day turn time savings on those, because if you think about it, if we can build a labor force or workforce of property data collections that do nothing but go out and collect data, and we have appraisers that really do nothing but sit at their desktop and receive property data collections and do these things, you free up a lot of the time that the appraiser spends out in the field doing the inspections. So, and then cost savings, we have observed around $100 cost savings on a hybrid appraisal versus a traditional. And we think as technology advances, as the technology is able to do more of the data collection and the human is required, to do less, that those cost savings can come down as well. As of April 2023, the pilot program has 15 lenders and 7 vendors actively participating. And then one important note, we are working with Freddie Mac to align our property data standard with theirs. So they had built and have been testing their own proprietary property data standard. We've been doing the same in pilot. We have been working very hard over the last 6 months with them to align that standard, and we're preparing to ship that off to our regulator, FHFA, and get their blessing, and hope to be able to publish the new aligned data standard that we're calling Universal or Uniform Property Data, UPD, in the next couple of months. So that's exciting. And then we've got just some resources for you. If you want to, we've got a Valuation Modernization website. There's a lot of resources on there that talk about our latest policy offerings, and wanted to make that available for you. So Tony?
Thanks so much, Justin. I appreciate that going over. I did post the link for the Fannie Mae Valuation Modernization website in the chat, so that it will be there. It'll also be as part of this follow-up email that we send out for tomorrow. We have a couple of questions, that we have had a couple of things come into the chat, but before we get to those, wanted to ask, so now that valuation acceptance and property data has been going on for a couple of months, what have we learned? Justin, you want to take that one?
Sure. So we have learned that it's doable. Our systems work, and we're making offers. We see offers going out, and we've had a number of third-party service providers sign up and go through our process of getting onboarded and connected to our API to be able to deliver these. We've seen thousands of property data collections coming in, so we know that the lenders are taking these up, and we expect the ramp up to continue over the next couple of months. We're in this for the long haul. We know that it took lenders quite a long time to fully adopt the traditional appraisal waiver, just because there's a lot of operational implications, changes that have to be made to do these things, and we see lenders today, the take-up rate on an appraisal waiver is very, very high, and we expect the same over time, especially with the UPD, the Uniform Property Data alignment with Freddie, is that becomes more standardized across the industry as more and more vendors are able to capture that data standard and deliver it to us and to Freddie. We think that adoption is just going to be made easier.
Excellent. Aaron, do you have something to add?
Yeah, Tony, I'll add in there. I completely agree with everything that Justin said. I do think there's an ongoing need for education with the lenders, borrowers, all stakeholders and realtors. At the lender level, everyone involved needs to be aware of what to expect. And I don't think we can take this for granted, right? It's a new product and there is no value on the property data collection. And that's something we've heard when we've delivered those first handful. People are going through and looking for a value. So just not understanding the process, and that will come with time and good communication. And we have an FAQ that we send to our clients. I know Fannie has an FAQ on their website. So just having the right resources and I think a trusted service provider to lean on. As Justin said, I mean, we're seeing a lot of these, but we're also noticing that some of our lenders are in a holding pattern for whatever reason. And, it could be that they don't have their internal process ready to go, or possibly their tech's not ready. And we've also heard, as Jason said, or Justin said, that they're unifying the data set, but there are questions about fungibility and being able to deliver to both GSEs, which we have a solution for. And then I think the last thing for us that we've learned is just it takes quite a bit of time to do the data collection. Our Validity Pro data collection app is extremely thorough, and there's really no way to take a shortcut. And from my perspective, that's a positive. It should give the borrower peace of mind that no stone is left unturned. And one of the most common complaints we get especially when the value maybe comes in less than the borrower expected, is that in a traditional appraisal, they were either seemed rushed or didn't spend enough time. And so there's just no way to rush this process. So, in my opinion, that's a positive. And I think this product will continue to improve with maturity and as everyone learns more about it and the technology continues to evolve.
Excellent. And you brought up some kind of our next question, which is what are some of the common misunderstandings and the confusion around the data validation and the property data? You want to take that one, Aaron?
Yeah, sure. So I think the most common one that we hear is around who's doing the data collection. And I think it's because in most cases, it's not an appraiser, not a licensed appraiser, although we do make it available to our broker and realtor network and our appraisers and trainees. So I can only speak for Stewart Valuation, but I think the misunderstanding is that we're using gig economy or folks that we're pulling off the street to do these inspections or data collections, and that's just not the case. And so from my perspective, there's no additional risk. We're using a very professional group, the realtor and broker network we've been working with for over 30 years at Stewart, over 15 with our appraisers. So I think just understanding your vendor or your service provider's policies and procedures. I do think it's understandable because obviously we want to make sure the borrower stays safe and that they have a professional interaction during the data collection. It's often the only face-to-face interaction throughout the loan origination cycle. So we want to make sure that it's a positive reflection on the lender. We've also heard questions around what triggers an upgrade to hybrid. And I think it's important to point out that it's not triggered by the property data collection or by the lender's underwriter going through the property data collection looking for a trigger. It's determined by DU and based on some change in the loan characteristics. So, the loan amount could increase, the loan to value goes up, and it's no longer eligible for a VA plus PD or value acceptance plus property data. And then I think we'd be remiss if we didn't bring up the appraisers. And, we've seen some concerns that it could affect their addressable market, their ability to make a living. And I just think that it's a very small percentage of the approvals getting value acceptance plus property data. Most of them would have received an appraisal waiver before, which obviously doesn't come with field work for the appraiser. So in my view, it's just not a meaningful impact. And so I think all of these things will get worked out in time with education and webinars like this one.
Yeah, I mean, we've heard some of those, and to your last point about, the addressable market for appraisers, most loans that come to Fannie Mae will still receive an appraisal, a traditional appraisal, a hybrid appraisal, or a desktop appraisal, period. And that's going to remain the case forever. I would say that we just spent the last 5 years, huge team at Fannie Mae and a huge team at Freddie Mac and a huge team at FHFA redesigning and getting ready to launch the next UAD, or the new iteration of the UAD. And so countless millions of dollars were spent in developing the next appraisal, technology for appraisers to use. So there's no, the misconception that we're getting ready or retiring appraisals altogether is just not true.
For sure. What about the barriers to adopt the value acceptance and data, property data?
Yeah, so first of all, the value acceptance plus property data is turned on for all lenders today. So you should be seeing messages for that in your normal business process today. There's obviously some there's some operational things that have to change in your systems to be able to order these things. You would have to partner with a vendor service provider that's on our approved service provider list. We've got that available on the resource page that I think Tony's going to be able to share with you. And so just being able to connect with one of those vendors and be able to order these things, and there's a couple of minor kind of nuanced things that you'll have to do. You'll have to be able to deliver the DU case file to your vendor, and that'll have to flow through the property data collection back to us. That's how we kind of tie things together. So there is some operational, barriers, but we have lenders that are doing it today. We have more and more lenders that are coming on board, and we think that's going to continue.
Aaron?
Yeah, so one thing that we have seen and heard is as a potential hurdle to adoption is some lenders manage their appraisals internally, or maybe they use a smaller AMC that might not have the resources to build a data collection app or to build a data collection panel, and that could seem like a hurdle. And certainly, I think if you're starting from scratch, it would be very difficult to build a data collection panel. It's taken us obviously years and years to develop that. But something that may not be widely known is that we do offer managed data collection services for lenders or for other AMCs. And we also license our technology for groups that want to handle it from A to Z. So as Justin mentioned, there's a list of providers on Fannie's site. And so I think that opportunity may not be widely known, but is certainly something we make available.
And the next question, and I think we've actually kind of covered some of this, but there may be others that we haven't addressed. What are the lender's responsibilities for value acceptance and property data?
Yeah, it's the easiest way for me to think about it is very similar to the responsibilities that a lender has on an appraisal that's run through CU and gets a score of 2.5 and below. So at that point, we're value rep and warranting the value. So we do the same thing for value acceptance plus property data. We're rep and warranting the value. Lender's responsibility is to assure that the property description is coming across to us accurately, and confirming that the property is in fact eligible to deliver to us. I mean, if it's a single family, saying it's a single family property and it turns out to be commercial, you can't deliver that to us. If it's a single family property that's in C6 condition, the data collection reveals it's in C6 condition, you can't deliver that to us. That applies to any loan for that matter. So property description and property eligibility are the two main things that lenders are responsible for. And Aaron covered it earlier when so there's not meant to be anything in the property data collection that is causing a lender to lose that value acceptance plus property data offer. It's really just credit characteristics change, LTV changes, loan amount changes, things like that would cause a lender to lose that value acceptance plus property data offer. And at that point, if they had already procured that property data collection, then they would be eligible to resolve that with a hybrid appraisal and have the appraiser complete that hybrid appraisal with the property data collection that was delivered.
Yeah, also the lenders, Justin, are also responsible for their data collectors, right? And making sure that they have an annual background check, proper training, competency training, continuing education for appraiser independence requirements, fair lending, and also, that there are systems in place to check performance. So that's certainly a responsibility. And I think that, again, can seem like a daunting responsibility, but it's an important question as you're looking at a service provider to make sure they have verifiable policies and procedures in place. Certainly not something you want your vendor to be figuring out on the fly. So, our data collection panel, as I mentioned before, a lot of experience, a lot of real world training. We also have online training modules to keep them up to date with continuing education. And so we have very strong and verifiable policies and procedures that will cover our lenders' responsibilities, which I think is important for their peace of mind.
Absolutely. And once again, you've covered just a few of these things already, but Aaron, what should a lender consider when selecting a vendor partner?
Yeah, so I think the most common questions that we get from either our current clients or prospective clients looking at partnering with us is around our data collection panel and who we're utilizing. Is it a panel that we have developed, or is it a third-party panel that we're utilizing? And again, as I've said, we've built our panel over many years: brokers, realtors, appraisers, and trainees. So they have that professional experience and competency, and they can answer questions that come up during the data collection from the borrower, from the realtor, which I think that human contact and interaction is a very important piece. And again, it's a reflection on the lenders. We want to make sure it's a professional experience. Again, as I just mentioned, the lender has responsibilities. They need to make sure their partner has verifiable and, I think, mature processes in place, strong policies and procedures just to cover their responsibility for the background checks and everything they're responsible for. Scalability is a big one. I think that having the infrastructure to grow, as Justin mentioned early on, modernization is here and will likely continue to expand. So I think having a large scale data collection panel that can scale, and again, this is not something you want your service provider to build on the fly. We have nearly 10,000 providers in the field, and so we can touch just about every part of the country. And then we talked about fungibility and being able to deliver to both GSEs. We spent significant additional resources and time making sure that our collection app is able to deliver to both GSEs, regardless of which you start with just one inspection, and it's a seamless delivery to the GSE. So I think those are the top things in my mind to consider.
Excellent. Anything else, Justin, that you would like to add about selecting your vendor?
No, I mean, I completely agree with everything that Aaron mentioned there.
Excellent. We have time for one more question. And the chat is, you guys, thank you so much for putting information into the chat and asking your questions. Some of them are very specific about processes, so we will probably answer those offline, if that's okay. Our last question, how does modernization, and it seems like, this is kind of answers itself, right? But how does modernization make the industry better?
Yeah, I mean, I think if we go back to some of the key industry challenges that I mentioned early on, I mean, those are not just Fannie Mae industry challenges as we see it, I mean, those are collective across the industry, and were really highlighted in FHFA's RFI a couple of years back. So we agree with those things and those challenges, and we think about them often as we're trying to roll out new solutions. I mean, in general, we think that it's good for the industry because it improves accuracy. And what I mean by that is, I was an appraiser for 13 years, and I never took an inspection class. I learned how to inspect properties by my supervisor, and I think he did a really good job, but that I learned from him, and I did it the way that I was taught. And the next appraiser maybe taught a little bit different way. So there's no standardized process. So when I say accuracy, we've standardized this inspection process, and Aaron mentioned it. The app that they have built and others have built is very robust. It's standardized. It walks the data collector through, a very structured format. And we just believe we get a more holistic, robust set of data about the property from that process. And by the way, we think that we have appraisers doing these things, and appraisers are very well suited, especially at a time where there's not a whole lot of appraisal volume, to do these things. And we encourage appraisers to do these property data collections and think they're great at it. We think that these solutions will create more efficiency and can increase the speed of getting an appraisal done when one is needed. There's more transparency involved. And then I've mentioned cost effectiveness and just more efficiency in the appraisal process. Also, the bias thing, I won't harp too much on it, but if we have someone out with a standardized set of data and a standardized app collecting the data, it's just a more objective process, and it removes some of that risk that might be involved there.
Yeah, I agree completely, Justin. In my view, there's just no downside. It's a better experience for all stakeholders. And I think it's important to note that this has been and being responsibly rolled out by the GSEs. They've been in test and learn and pilot for several years, 5 years, I think Justin mentioned, and the data indicates good performance. So it just solves so many of the problems. So to me, it's great that the GSEs are leading the modernization effort. As a service provider, we are extremely limited in what we can do in terms of innovation without the GSEs. So them forging the path for innovation is certainly very important. I think, since this has started 5 years ago, and really, COVID was really expedited some of these emerging technologies, but we have made a lot of ground in a short period of time. Things like floor plan, digital floor plans that we use in our data collection app, artificial intelligence that we're using to recognize images in the appraisal. All of that made possible by the GSE's focus on innovative technology. And I think it will just continue to improve, and the bar will get raised even higher, and hopefully it reduces friction for everyone across the board.
Excellent. Well, thank you guys so much for this important information. I appreciate it. We will take the questions offline and respond to those as part of the follow-up email that comes out tomorrow. So you'll have a follow-up email with a recording of this session, as well as a copy of the deck that Justin shared with us. Guys, thank you so much for your time today. Really do appreciate it. And thank you guys. Thanks everyone for joining us today on TMC Connect. I hope everybody has a great day.
Thank you.
Thank you.